Hello, today we are solving October 2021 paper question number 2, part D. State two possible reasons, two possible reasons why the profit for the year as a percentage of revenue was different for food and clothing. So we had calculated the profit for as a percentage of revenue in the previous question. For the food it was 3.6 percentage and clothing it was 18.5 percentage. So he is asking, why do you think that that has happened? So from the formula we know that you have to describe only what has happened to the profit and revenue, okay, that has affected the profit as a percentage of revenue. So we can see that the profits were different, right? So the profit for the food was 32,500 and for the clothing it was 55,500. So the profit for the food was less at 32,500 than for the clothing, which was at 55,500. This may be due to increased overhead cost, which we can see. Okay, one of the things that affects the profit is the overhead cost. So the profits might have been less, probably because the food had a overhead cost of more. Okay, and clothing had a overhead cost low. So then you have to reason out that this overhead cost for food may be because it had to be stored using freezers. So they had even mentioned here food freezers. So you can use something to say that it is a perishable good. Okay, it gets spoiled easily. So they must have used freezers and it must have consumed electricity and stuff. So the overhead cost was more for the food. And whereas for the clothing, because it's a not a perishable good, you don't need any freezers, and also the overhead cost must have been lower, so the profits were higher. And the second thing we can notice is for the revenue we have to comment. So we can see that the revenue for the food was more than for the clothing. So this you have to suggest the revenue for food was more, probably more quantity of food was bought by the people because it's an essential good. Okay, whereas clothing it was bought less often, probably that's why the revenue was not so much. Okay, less often and less quantity. Then part E, state giving one reason for each answer whether 1 to 4 is a capital expenditure or a revenue expenditure. So for this question they have given some of the things like Worlebury Stores is planning for major alterations. The following works will be undertaken. The first one is the building extension for the administration department is being done. So this is a capital expenditure because this is done, okay, only once, and it will be added to the non-current assets and it is going to provide for benefit for many years. So you have to say at least 2 points, identify it as a capital expenditure or revenue expenditure, and you have to give an explanation because it means 2 mark for each of the points. So the second one is a clothing department. It will be redecorated. We can see this could be a revenue expenditure. Redecoration expenses might be carried out. Okay, redecoration will be carried out regularly and it will not provide for many years. So I might have to incur this cost over and over next year. Then we can see that the advertising signage will be installed at the entrance of the store. This also is not a permanent one, so I need to keep changing this. This is a revenue expenditure and this is changing regularly, this signage, and so it does not provide a long term benefit and the expenses will be incurred and recorded as the revenue expenditure, okay, in the income statement. The food department will be fitted with new freezer. This is an asset, so it's a capital expenditure. So new freezers will be a non-current asset and it is going to provide benefit for the many years. Then next one is evaluate if there is a benefit in preparing departmental accounts when many of the costs will be apportioned. Is it beneficial to prepare departmental accounts when many of the costs are going to be apportioned? If I prepare the departmental accounts using apportion of cost, it shows that I'm using some reasonable proportion ratios, like we had used some ratios, okay, to understand how costs are related to each department, and this is going to enable me to understand the profit for each department to be calculated and understood, and decisions can be made supported by the information from each department So it also shows the quick contribution that each department makes to the profitability of the business. We can see, understand the profits earned by each department as we had done here. Okay, so we know like that. Then the second, the negative points for preparing this using apportionment of cost is that it is an estimate. I have assumed that these are the ratios in which I am going to apportion, and also the actual cost may be different for each department. Okay, I might have forget to include, or there might be so many costs which you might not account for, so this can lead to inaccurate apportionment, and your decisions will lead can be wrong. Okay, like shutting down of a department or expanding a department, all such decisions will go wrong. And also the cost drivers may not allocate a cost accurately, and it is difficult to determine such ratios. How do I say the food is consuming, the food is having some this match percentage. Okay, which I had used the depreciation cost, so some reasonable basis I will use, but it is not an accurate one. So the cost drivers may not be accurate, and it is also very difficult to establish. Some might have arguments in the department that this is wrong. So complementary departments will also get affected by such decisions about other department when you are making, like when we say, oh, this department is making a loss or this department is making a profit. Even though they are complementary, when we are making some decisions to change, okay, or bring in a new asset, it's going to affect the other department also. So in conclusion, you can say it is good that they have to prepare these departmental account using some apportionment, because otherwise you will not understand the cost which is contributed